So now it's all about to get some knowledge from the leaders of industry. So it's the time to start our main topic, the panel discussion, the first panel discussion from which we all are going to learn something new. So the first panel discussion, the topic is co-lending done right, collaboration or chaos? It's a question mark, of course. So to start this first panel, I would first like to call on the stage our moderator, and he's the partner, Financial Services Risk Advisory, Grant Thornton Bharat LLP, Mr. Vivek Iyer. Come on, everyone. Yes, sir. And to start the panel, I would like to invite one by one all the panelists. First, would like to invite Mr. Ashok Mittal, MD and CEO, Bilmart. Next, Mr. Alok Pathak, Director and CEO, Sharp Finance. Mr. Anjan Das Gupta, MD, ASA International India Microfinance Private Limited. Mr. Prasanjit Datta, CTO and CIO, Vivriti Capital. Mr. Prateek Garg, Chief Business Officer, Ambit Finvest. Mr. Manish Pandey, Zonal Head Business and Collection, Muthoot FinCorp Limited. Mr. Sushant Kumar, Head Collections and Resolutions, ICICI Home Finance Company Limited. Let's welcome all of them with huge round of applause. Come on, and let's start our first panel discussion, co-lending done right, collaboration or chaos? Now I would like to request Mr. Vivek Iyer to please take over this session. Yeah.
Check. Okay. So it's working. That's good. Uh, so, the topic, co-lending, collaboration or chaos? Question mark, as the punctuation is rightly pointed out. And pardon my humor. Pardon my humor, I have a problem. Working in financial services, a lot of people tend to get very serious and it really gets to your head. So one of the things I like to keep it a little light. So pardon my humor, the intent is to keep it light. But the topic's quite heavy and we have a lot of heavyweights in our group to basically talk about it. So co-lending, collaboration or chaos. The only probably about 30 seconds I'll spend is that any collaborative initiative, anything that is being done new is always chaotic to start with. It's always about how you make it collaborative. So I personally think it's more about the choice that one needs to make. And personally, in terms of, I believe that co-lending is a great product. And the way it has basically, in terms of brought about access to credit to so many people, is something that has really made a big difference. I'll stop here because I personally think in terms of the insights that you will actually get from the panel members is going to be far deeper, and that's really in terms of how I wanted to keep it. Usually, as a part of panel discussions, the moderator has a set of questions. He poses it to the panel, and the panel kind of respond. But I don't believe I have earned the credibility to ask this esteemed panel questions. And I'll be very honest about it. I personally think that the objective of any panel is to enrich the overall group in terms of the thoughts and insights that they could bring on the table. I would actually request, that's why each one of the panel members here to share their perspectives in terms of what they feel about co-lending, or what are some of the opportunities, challenges, changes, future that they see. And we'll go around here kind of taking each one of the inputs from that perspective. What I'll probably do is, and in no random order, I'll probably take these three gentlemen first, then move there, then move here, and that's the approach we'll take. So over to you.
So, hello everyone. My name is Prasanjit and I represent Vivriti Capital here. Since I've got this opportunity, let me spend a few minutes on Vivriti Capital first. So we started back in 2017, and the entire motto of Vivriti was always that we build a tech platform. So when we were thinking like we have to do something, we never thought that probably will be a conventional NBFC which will be like across the country and having some branches and all that. But we thought like let's leverage tech and data to build a company, and that is where basically Vivriti started. And although predominantly we're a B2B company, where like our primarily we are an institutional kind of a player in the market, but co-lending is something which is our one of the largest portfolio, and we are one of the largest providers in the country because of our tech platform. Because what we thought at a very early stage that co-lending is going to be the kind of a future in the NBFC journey, and we started investing into this tech platform where we should be able to collaborate, and we should be able to connect with the other NBFCs. So that's how this thought process started. And so what we did, what we actually did in our system, that we should be able to create. So typically, let's say in a BC model, what happens? Let's say there's a bank. So earlier, when I used to be part of a bank, so we used to create a system which is like follows the bank policy, and with that bank policy, we approach a BC, and BC basically integrates the system with me, and they follow my policy. But when it comes to an NBFC, it is very, very difficult. So whether it's a non-RE or a RE, they have to integrate with us. So we also have to make sure that we are offering them what they offer. It is impossible that I impose a policy on them, and we feel that was one of the key aspect when we tried to crack the co-lending. So what we do, so we actually cracked in our system in both in our Apollo and Zeus, which is like loan origination and loan management, where we replicate 36 types of asset classes in the system. So we walk into any client today and we say, hey, we can actually collaborate you, and we give the APIs. So we actually generate the APIs according to their asset class, and we just give them a document, and in that document basically they have all the API specs and all readily available basically. And at the same time, we tell them that hey, your LMS has got this kind of a policies. We should be able to recreate the policies there, and from there the journey starts. So typically it takes some time in terms of the integration. Initial days it used to be around 40-45 days to take. Now we are bringing that to almost around 20 days. We are going live in 20 days kind of a thing. In fact, one of the partner here also, I can say Kish is kind of we are integrating right now. I saw that name here, so we are actually integrating with them as well. So that's how basically if you leverage tech and data, I feel that this is something would not be chaotic, because the subject is that is it chaotic or it is going to be collaboration. I think we as an industry, we really have to collaborate, and I think tech and data will definitely make us in terms of the decision making when it comes in terms of in co-lending, that we should be able to take a right decision, and the money goes to the to the end borrower. So that's how we have cracked it, and I feel that's the way forward in this industry. Thank you.
Hi, good morning, everyone. My name is Ashok Mittal, and I represent Billmart, which is a fintech platform for supply chain finance. But I also have some exposure involvement into NBFC companies, and we have done chaotic collaboration with a lot of other larger lenders. While like co-lending, I think largely loan to people. One is a smaller, poor partner who does not have money, and there is a larger partner who has money. So, poor partner has all the responsibilities, liabilities, accountabilities. Larger partner has no responsibility, liability, accountability other than giving the balance sheet. I know larger partners will not like it, but co-lending is necessary, must important for everyone, I guess. Largely because there are various segments, and one larger player may not have all the availability of resources, places, products, all the features which they want to create. So that is where fintechs play a very large role. He has mentioned RE and even non-RE players. So there can be multiple models or methods of doing co-lending. It can be 100-0, it can be 10-90, 20-80, 50-50, whatever. And even certain, I will say LSPs, etc. They do without any kind of FLDG as well, because their sourcing model may be very strong. So as long as you are able to prove that your sourcing is good, your underwriting good, you have control on everything, then you can maybe source and give to larger lender without even guaranteeing or FLDG. Still, earning decent amount of money. So there is good amount of combination you can create in the structure. Of course, of late, a lot of guidelines from RBI has come, which are making this segment little more interesting. Lot of thoughts I think we'll have all of this when we discuss, debate, argue on good, bad, whether how it's beneficial, not beneficial. So we'll talk about it, but I think this is a very important and relevant subject in today's world, because everybody is looking for some kind of collaboration, which was not the case 6-7 years back when Anupam has started this vertical. I think post that this whole has picked up a lot. So we'll talk about it. Thank you so much.
Hi, good morning all. So I'm Alok Pathak. So I had a small NBFC. So we have just set up almost few months back only. So one very important thing, what I have seen, especially on the co-lending side. So generally, what we have seen, whenever regulator come up with some very new guidelines or very exhaustive guidelines, so that shows that there is something what they are really keen, and they really think this is going to matter a lot in future. So like when we talk about Viksit Bharat and India, like 30-35 trillion economy. So everybody knows that if you want to create that kind of economy, so from where the funds will come. So I think lenders are going to play a very big role. So for a 30-35 trillion economy, you need 20-25 trillion minimum of the lending portfolio in the whole country. So if you want to reach that level, so how many banks we have? So we have limited banks. So we have a great opportunity for the NBFC sector, which is slowly it is coming up. Now people have started realizing this is no more a shadow bank or whatever words people were using. So I think now they have become a very in front actually it is coming. So now whenever these kind of changes are happening, so definitely it comes with a big disruption. Many NBFC, the major role for NBFC is to do little things differently. So you can't do the same thing what bankers are doing, otherwise you will not have any market actually. So, and of late, I think FinTech has done excellent in that sense. So continuously new things are coming, new products, new technology, new ways. So I think that even financial inclusion, I have seen that last 5-6 years, the kind of financial inclusion has happened, it is great. So I think on an overall basis, if you sum up all those things, so I think this is going to be a new era for this partnership model, because lending to directly to NBFC is always a challenge for few banks because of their own policies and structure. But when you do this kind of partnership, so obviously NBFC will have their own very strong presence in terms of product, in terms of technology, in terms of delivery model, and that can be backed by the funding from the large player. And especially the kind of relaxation what we got in the latest RBI circular, especially when we talk about instead of 2080, they are allowing now 1090 also. That's a big change. FLAG they have introduced in co-lending, which was never there. And the major part is like only PSL was allowed earlier. Now they are allowing that you can do all sort of products. I think that's a major change, and it is maybe that down the line people will like to do unsecured lending also with the same model. And that is going to be a very big business as a whole. So I'm looking is that it's a very big opportunity. But again, bankers have to be little careful. Like you can't just rely on only that, okay, I have onboarded something, now partner will take care. Sometimes that casualness comes. But I'm sure when we are talking about big, so nobody will take that kind of chance. Thank you.
Hello. Yeah, hi. I am Prateek, working with Ambit Finvest. We are a mid-size NBFC, so neither too small, neither too big, 4,500 crores AUM. Interestingly, we have been doing co-lending both ways. Co-lending in wherein somebody like a smaller originator, people here in the panel also we have worked with who would source loans for us. And there are obviously larger banks for whom we source at the company. So seeing both sides of it, I think I'll just tweak maybe the discussion point itself, wherein it says co-lending, collaboration or chaos. I would say it is collaboration and chaotic. So it is both. I mean, when you talk about co-lending, it should be having collaboration and it will have chaos. There are no two ways about it. If somebody tells me, I don't know if somebody want to debate it and tell me that it is not chaotic, I will disagree and I will put my foot forward. No, it is chaotic, but it is collaboration too. I also kind of use this terminology in multiple forums, and I'll again maybe want to reiterate it. So when we do BC, it's more like we are dating somebody, right? So you don't know too much about the person, you start dating, it's great. Then if you want to get married, I would say then it's co-lending. So I think dating is BC, marriage is co-lending, because for co-lending you get to know each other for a long time. It's not a like a small business that you start today and you stop. It's like a long view that you take with your partner. You have to align many processes when you do it. I'll tell you very small, simple examples. I mean, practical things that we have seen over time. So we as a company, we have a roundup logic when we do a repayment schedule. So what does that mean? It means that if something is written as 1000.01, we consider it as 1001. As soon as the decimal goes, we change the roundup logic. But there are a lot of other companies who do a round off logic, wherein if it's 0.5 more than decimal, then it goes to the other number. Otherwise, it's to the previous number. This over time can create different repayment schedules, wherein one account may become overdue in one partner's book and not so for the other one. So these things, when you start collaborating, you have to think about tech. You have to think how your KFS or RBI has come up with many guidelines wherein you have to have a key fact statement which has the right repayment schedule. So in our mind, we think it's just a rupee, right? That ultimately doesn't matter. But when the classification DPDs are happening daily as per the RBI guideline, it becomes a chaos. So these things, obviously, all of us have to be mindful whenever we do co-lending. Regarding the recent circular, I think it's a positive change, which he has already mentioned, right? What are the changes? So product agnostic, earlier it was very specific to PSL. That's a great change. Although NBFC and NBFC have been doing co-lending, RBI had never acknowledged it in the past. It was an informal stance wherein today I as an NBFC was doing a co-lending with other NBFC, but RBI had, the previous circular only mentioned the co-lending between a bank and NBFC. Now they have clearly said any two financial entities can do a co-lending. So that is one great change. FLDG, it was never clearly mentioned whether you can take FLDG in a co-lending business or not. They have now specifically said that you can take FLDG. Again, there are certain gray areas. So I would say that this circular, again, I think regulators also, when they come up with a circular, there are representations from banks and financial institutions. They would make certain changes to my mind. So I'll give you an example here. Like the FLDG here is being said that it is 5% of the outstanding that you can take an FLDG. There is certain reference of DLG guidelines where it says that DLG guidelines, you can take 5% on disbursement. Somewhere it's saying outstanding, somewhere it's saying disbursement. I think there are certain more clarifications to my mind that RBI will come up very soon. On the MRR requirement, I think it's a positive change that made it 10%, which again gives you certain more cushion. As he rightly said, at least we all know that co-lending here is to stay. The focus of RBI is very clear that they have to empower both the partners in a way that somebody who has a balance sheet, he takes advantage of the smaller partner. Somebody who has the reach, which what we call as a shadow bank, who are reaching the tier 3, tier 4 cities, they can source and they can partner it with a larger entity. So yeah, that's about it.
Yeah, hi, good morning everyone. My name is Manish Pandey. I represent Muthoot FinCorp as a business head for West, for business and collections both. So I've been seeing the journey while, the onboarding the customer, getting new customer onboarded, and also the collection part, which is a very, very critical thing, because lending business is always thought as a, it's just to give money in the market, but it is actually the business of collection, not only to lend. So the co-lending, from where it is started, we I would like to take you to the first, from where we have started this co-lending, all the arrangements. So like I have a presence, but the bank doesn't have a presence in the larger or the deeper pocket of the pan India. So the purpose behind is to cater the uncatered customer. So I will like to focus my discussion more about the customer journey, rather than, because most of the point has already been covered by the respected panel members. So there were a lot of customers still there in India where the banks or NBFCs are not present. So the idea behind was for the co-lending that if I have a distribution set up across the category C, category D cities, small cities, towns, where there are a lot of customers who are still unbanked, they don't have any, banks or the NBFC branches where they can be, their financial needs can be catered. So this was the purpose behind when this co-lending has came into the picture, and it has evolved lot of things. Obviously, the fintech has helped a lot for the quick decisioning and everything. Still, we see there are a lot of challenges comes when we talk about the unsecured lending. Uh, in the co-lending model, the secured business is doing quite a well. But when we talk about the unsecured, still into the deeper market where the customer is not so much of tech savvy, or still, I mean, they log in your app, they go midway, then they cannot move ahead. So somewhere the technology is helping, specifically through a fintech, through a co-lending partner. But still, those around 35 to 40%, there's some data where those customer come midway and they go back. They never complete the onboarding, specifically on the unsecured lending business. So this somewhere, as a technology partner, as a fintech people, we have to see that how we can ease out those application where our those kind of customer who are not that much tech savvy, so they can actually complete their journey. That was the purpose, while reaching to those unbanked customer and where the banks and NBFCs are not present. So this is one way to see how the co-lending has been reaching a lot of people, touching a lot of lives. But still, there are a lot of scope is there where we can still have to reach out to those unserved people. Thank you.
Good morning, friends. Myself, Sushant Kumar. I work with ICICI Home Finance. Banking has transformed over a period of time. Earlier, we had private banks. Then, again, concept of public sector bank came into picture, and all the banks government has undertaken, and it became a nationalized banks. Then later point of time, government realized that they don't have much capital to infuse in all these public sector banks. So again, they went for the liberalization, and then private banks came into the existence. Then in 2002, they came with SARFAESI Act, under which they had given the power to the bank to securitize the portfolio. And by that virtue, most of the NBFCs and HFCs used to get capital. But that was the transaction based. And 5-6 years back, government realized that they don't have bandwidth to reach to each individuals, that 150 crores population, through the existing branch network. So even SBI, which is the largest bank, is having almost 23,000 branches. So by 23,000 branches, you cannot reach to 150 crore population. So they will have to integrate with the NBFCs or the HFCs to reach to those customers. I will give you a data. Still in India, almost 18% customers don't have bank accounts. And the credit penetration which we talk about, so any individual who is having the credit exposure by way of credit card or say personal loan or STPL, this is only 16% of the entire population. So there is a huge market which is untouched, which is not having the credit benefit of the present banking system. So public sector banks or private sector banks will have to collaborate with the partners like NBFCs and HFCs to reach to those customers. And that is a huge market. When we are talking about that we want to grow at the pace of above 10% in terms of GDP growth, or we want to become number 2 or number 3 in terms of GDP. We will have to bring those persons, 84% population, which is not having credit exposure, to in the system. Today we are talking about unemployment. Unemployment, how you are going to remove the unemployment? We cannot give government jobs or private jobs to each and every individuals unless and until you create jobs. And creation of jobs happens only through enterprise. So for that also you require capital. So that is the need of NBFC and HFC in today's scenario. And the major challenges which NBFC and HFCs are facing, that they don't have capital. And we have banks which have capital, but they don't have the mechanism to reach to these customers. So they will have to collaborate, and that's what this co-lending came into existence. Now, as rightly pointed out, that chaos will be there, because in any relationship, any journey, any change which you are bringing into the system will start with chaos only. And then obviously over a period of time, you will realize the problems and you will address it either through technology or through your master directions or through the documents which they generate between the agreement which they make between the NBFCs and the lending partner. Earlier the problem was they were two distinct entities working in two different spaces with different policies, and even say like data capturing itself. So NBFCs has very limited data capturing at early stage, at the LO stage, that is loan origination stage. But banks have almost 95 fields which they are capturing. So if somebody is capturing only 16 fields, how you are going to replicate in the columns which is having the 95 fields? So for that also you need tech partner came into existence in between and give you the bridging this gap, as well as both are having the different credit policies. Both are having the different even credit cycle. So somebody is having 10 to 10 cycle, somebody is having, even most of the PSU banks are having the month end as a repayment cycle. And if you are changing the repayment cycle, so everything will change. Your DPD calculation will change, your NPA will change, your provisioning will change, everything will change. And for that also you require again bridging this gap through your technology partners, how you can make it this journey very smooth, so that one is having the 10th cycle, another is having the 30th as a cycle. Obviously the one account will become NPA 8 days before the others. So for that also you require technology partners. So there are multiple things, multiple challenges are there still, which we need to address. And with the help of technology, I'm sure that we will be able to address it. But one thing is everybody is sure about, that this collaboration is needed. And this is the only way forward if you want to cater the entire population of India, and if you want to bring them into the main line of credit, and if you want to give them the credit benefit. Thank you.
Good morning. Thanks to Anupam for having me here. I'm Anjan Das Gupta from Asha. You must have noticed deliberately I am speaking the last, so I have to speak the least because everything is already spoken. And another reason is that, the greatest wisdom comes from a person who has endured. So at my age, I've enjoyed the joys of life. I've also endured all the challenges, So, everyone who spoke, they took the blood pressure up, like saying that, oh, we are going to have a wonderful world, So, but like a grandfather, like daddy ko bolte hain ki main college ja raha hu, daddy says, हाँ शाम को मिलते हैं. But a grandfather will say, बच्चा ठीक से जाना, रास्ता ठीक से cross करना, गाड़ी तेज चलती है, सावधान होना. So, because I've endured, I'm going to talk on such topic. Of course, yes, co-lending is a wonderful model. Of course, yes, co-lending gives you the greatest return on whatever you have invested. Of course, yes, that co-lending will require least of capital. Even the current circular, yes, it is very good. I also agree with Iyer that collaboration brings in the best. I mean, if you network, collaboration brings in the best. But it is also important, here comes the caution, it is also important whom you collaborate with. Like if you're going to collaborate with someone who says heads I win, tails you lose, you had it. So that is the problem. Like, I mean, Reserve Bank of India, if you go into the history of this circular, it came out sometime during COVID to do good to the priority sector, the underprivileged. But a footnote in that circular allowed everyone to do it. It was not in the major circular. The footnote allowed everyone to do co-lending. That is why someone did mention that even NBFC started doing co-lending. But now they have opened it up. They have opened it up with for everybody. But even on the lender side, they have included everybody but the small finance bank. Wish they had included small finance bank. They have kept silent about urban banks. So obviously it's an exclusion list. So the urban banks also can do it. But here, if you see the sector that we are targeting, now if someone comes to me that I'm going to co-lend to you as a middle class or upper middle class or whatever you call me, I would say least interested. I would better take it from one organization. So mainly you will be catering to that segment, which is having little reach to finance, where others can't reach them. You'll be catering to them, and the risk element in that sector is higher. Now, let us go into what Reserve Bank has said. In the first circular, there was nothing called FLDG guarantee and all that. It was left vague. But here they have categorically said that you can take FLDG. Even credit guarantees you can take. They have left it open how much you can take, because in one place they have left it open, another place they have said you can take 5% of the outstanding. But now you go back, someone said that first is dating and then marriage. Let me go back to the dating part. In dating part, it has been a horrible experience. Different people have taken different advantage. The heads I win, tails you lose. Like somebody has said that it will be 5% of the disbursement. Now disbursement, somebody has said that 2 months disbursement, 3 months disbursement, or 1 year disbursement. The greatest benefit or greatest risk has been avoided by the person who said cumulative disbursement till date. There are institutions who have taken 5% FLDG guarantees on cumulative disbursement till date. You make a calculation. He's covered 100% of his risk. So coming back to collaboration, whom are you collaborating with? That is most important. What is the agreement? Sometimes we go and sign the dotted lines without seeing what is the future implication. COVID has thrown up greatest risk, greatest challenges that can come into open. And organizations are actually tumbling because of such issues. So what you're signing in the dotted line is important. Whether the spirit of the law, the spirit of the regulations is being maintained by our network partner, that is important. And we need to see everything. Life is not the same as it was during our young days. We used to, how many of you have heard the concept of 363 banking? Anybody here? No. In our times, when we started our career, we used to call it the 363 of banking. And less complicated, you borrow at 3%, you lend at 6%, at 3, you go to play golf. So that was profit. But now, it was pure client relationship and client trust. You used to do banking. Now there are multiple products, multiple activities, multiple regulations. You have to deal with them. The ALM is complicated. Everything is so complicated. You have to deal with them. So as the complications increase, you have to actually be careful on what you are signing. Now, let me give you another case study. Just 2 weeks back, somebody who was doing co-lending came to me and he said, no, I'm not going to do co-lending with them. I'm not naming the institution. I said, why is that? You are doing well. He said, you don't know. In Bihar, a political leader, he came to my branch and said, branch ko jala do. Okay? He says, both the institution have put it up in the credit bureau. So there are 2 lenders to 1 client. And that is obvious, it is happening. And when there are two lenders to one client, he cannot take any more loans because of our guardrails, which is there in the MFIN guidelines. So there are challenges. These challenges needs to be addressed. Reserve Bank, as someone mentioned, has mentioned that I can take 5% of the outstanding. Now that 5% of the outstanding also has to be viewed with a double magnifying glass. Which outstanding? Is it individual outstanding or cumulative outstanding? If it is individual outstanding, it is fine. If somebody has defaulted 5%, I can take the risk. But it is cumulative outstanding, then every default, if you take a percentage, it will go up to 38 or 39% risk that you are covering. So these are, I would call, our guardrails that we need to see whether we are entering into a partnership with enthusiasm, and the enthusiasm should not be so much that ultimately we are putting ourselves on a long-term risk. We need to be careful. The guidelines are good, the concept is good, but how you are actually going to practically use it is on you. How much risk you can avoid is on you. But it can be a brilliant concept. It's a brilliant profit-making concept. Again, another example I'll give you is I have seen organizations, my colleagues, who have been doing co-lending. Suddenly the partner exited. Said, no, I don't want to do co-lending anymore. So what will happen to the institution? He'll have to continue making the collections. His FLDs is in jeopardy. So what happens to the whole business? His business will crack. So the agreement also should have clauses where if the partner terminates the agreement, what will be the situation, whether you should continue making the collection, whether your charges will increase because your portfolio is going down, your cost of operation remains the same, whether that can be handled or not. So my take on this is we need to be very careful. In one of Anupam's event only, I mentioned that it's as he mentioned, a dating example. In that event, I mentioned that it's a 21-year-old marrying a 65-year-old. So 21-year-old is the partner, who is very enthusiastic. I will do a good job. I will help the poor. I'll help the underprivileged. I will do a lot of things. But the 65 years old, if you want to move him, it will be very difficult. So that is the issue. That is another issue that we need to handle. Thank you so much.
So that was some really insightful points that came in, and especially in terms of, I like the analogies on dating, marriage, 21, 65, really kind of, makes me wonder many things which my wife will not like. But in terms of some interesting points that actually in terms of came out was, the whole piece, Pratik, you mentioned about the whole regulatory clarity that needs to continuously in terms of come in, because it's not just about creating an enabling ecosystem, but continuously engaging and seeing, because the ecosystem changes. And it's very important to kind of evolve with it. So, that is a great point, that came in. You mentioned a very interesting point on the whole technology platform and how it needs to enable. Again, the theme being on evolve with the changing requirements. And that was something that really in terms of, added great perspective in terms of how tech platforms also need to kind of continuously evolve. Ashok sir, you made a very useful point in terms of collaboration, chaos, and how it is not a mutually exclusive event, but how they actually in terms of go hand in hand together. Alok, your perspective in terms of how co-lending as an ecosystem needs to continuously stay focused on the customer, is something that was very very useful. Manish, you made some interesting points on customer experience and the customer focus and how that needs to be an important journey, and how basically in terms of that brings in inclusion. So one of the interesting points I took out of that conversation was, when you have a very large network, your ability to kind of understand the customer is also important. Co-lending through its partners offers you that insight to be closer to the customer to get great insights. And once you have great insights, your underwriting decisions, your ability to kind of have good quality assets as well as service the customer effectively, increases. And, in terms of that, those that point was something that was really interesting. Sushant, your point on in terms of how the entire banking system has evolved, and as a result of that, how the NBFCs came into being, how co-lending came into being, really helped get a broader perspective in terms of how, none of those perspectives were, the focus was always the customer. The focus was always on providing access to credit. But how we have evolved over a period of time, learning from our own mistakes, improvising and going along the way. And personally, in terms of Anjan sir, you summed it up well. I mean, you had to go last, and obviously it was not the most easy thing to do, but with so much of wisdom, your ability to kind of look at the whole business and really, the interesting point I take away from that conversation is know your partner. We talk about know your customer. We talk about, importance of customer experience. But co-lending, the most important focus is to know your partner. And which is why the analogy on the 21 and 65 is something I like, because it's also about choosing the right set of partners. Partner due diligence, one of the most important pieces from that perspective. Personally, I've always been a risk guy, and I've always maintained that the only reason I've been a risk guy is because no one else really gave me any other job. About 25 years back, I'm a chartered accountant, so about 25 years back, I tried to apply for a job in audit. They said, audit kiya? I said, nahi, tax ka banda hai. Tax karega? I said, nahi sir, bore ho gaya. Tax nahi karna. So they didn't really understand where to fit me. There happened to be an opening in risk advisory. And I think they were really desperately in need of people. I genuinely believe that is why they hired me. But because risk was new, not many people were there, it was a great opportunity. My lens to all my understanding of financial services has been risk. And little did I know that it will actually give me a beautiful ringside view of understanding the business, because each one of the points you mentioned, you all spoke about business risk, you all spoke about regulatory risk, you all spoke about technology risk, you all spoke about conduct risk, which is essentially the whole customer piece. You all spoke about in terms of knowing your partners, knowing your customers. And that, thereby having a bearing on the whole credit risk, the collection pieces, the DPD reporting piece. Very interesting point. I really like the whole rounding up and rounding down thing, because a genuine concern, because even one DPD misclassification can really, in terms of, cause a big challenge. Oh yeah, the fire in that branch, man. The political situation in the country is always a new twist to the businesses that you don't that you don't envisage. But personally, in terms of this has been a great experience. Only one question overall to the panel, and this is something that that regularly keeps coming in. And feel free to add as many disclaimers as possible while you respond. How do you view in terms of the regulator's approach to co-lending? It has evolved personally in terms of from being skeptical to being open. But how has that journey been? Some thoughts from each one of you, whoever choose, would be useful.
So I actually wanted to talk on this. Like Prateek has asked, I think let's be clear about this, whatever side you are, sourcing partner or lending partner, you will never ever find that the regulation or the circulars are absolutely clear. It's never going to happen. In last 15-20 years, whenever we talk in various seminars, the issue is there is a clarity required, clarification required. So this is not going to happen. So we have to live with whatever regulations, circulars, guidelines we have, and whatever way we all kind of understand them or think, okay, this is what it means, right? So let us interpret and do the business whatever way you can do. That is the only way you can do the business. That is one. Second, in co-lending, I think there is a topic that who owns the customer. So the customer belongs to your lending partner as long as everything is good. Customer belongs to you when things are not so good. So you are responsible for everything. And whatever experience I had is largely when the portfolio starts going little worse, bad, then even if there are a lot of lapses at the part of lending partner, etc., or let's say if there is a bank, you will always find that there is a delay in taking appropriate action. Even if there is a delay, the partner has to be responsible. So that is on lighter side, but in effect, sourcing till servicing, collection, closure, everything. If you are having control on the partner, then you own the customer. But it will also depend on the product. Now, if you are into a completely digital product where you have sourced the customer digitally and it's a faceless kind of transaction you are doing with the customer, then maybe everybody and anybody owns the customer. But if you are in a product like, I think people sitting here, microfinance or micro lab kind of a product where you're required to go to the customer, visit the customer, meet them, maybe not only for sourcing but for servicing, for collection, then the person who is in touch with the customer actually owns the customer. So this is another very important thing. But I think more than sourcing, the servicing or handling a difficult client is far more important, because like Anjan has mentioned that your agreement you will find will be mostly one-sided. So the responsibility or accountability in terms of handling the customer in all the situations will remain with the partner. So I think that is very important, and in co-lending that has to be kind of accepted, because when I mentioned poor and rich, I mean because you are responsible, so you will have to handle the customer in those times, and then only you will be able to continue survive your portfolio. Rest I think points have been mentioned, that what are the terms mentioned in the agreement. You will have to accept them because you are going for co-lending as a sourcing partner, let's say. Then you will have to accept those terms and you will have to handle the customer. That is very difficult but most important aspect.
You asked about regulator. So it's my personal view that it's like a political leader. They are behaving that they are just making commitments, but they are not basically having the intent to do it. Sometimes it feels like that they are not much serious about the co-lending, because they want to, if they want to promote the co-lending, they will have to ease out the things. As I already mentioned that there are so many challenges, and even the panelist has given so many challenges, and the regulator is aware about it. So they will have to, like for banking, they have the master documents, directions, which is the elaborated one having almost 300 pages. So that kind of guidelines they will have to come in so that it can ease out. Currently, it seems like they are just talking about it, but they are not much serious about it. And that's what even after 5-6 years of launch of this co-lending, not much of co-lending business has taken.
Again, I'm last year, so I have no fear. As I told you, I'm 64 years old. If they throw me out of the job, I'll go play with my grandson. So I'll be happy. I mean, in fact, in one of the Southern Forum event I spoke, where a general manager of the regulator also was there. And I said, it's just like a Hindi movie Police. Like, I mean, you'll see sub action ho gaya, sab chori ho gaya, sab daketi ho gaya, and then they wo city bajate aata hai, कि क्या हुआ, किसको पकड़े, So regulator's job is absolutely like that, I mean, it takes me back, I was discussing just before the panel discussion, takes me back to our microfinance, where they said that no, your 85% of your portfolio should be unsecured lending, that is the eligible portfolio balance, 15% only can be other asset, Now banks are taking 10% FLDG or 5% FLDG depending on how much they can, fleece you. That goes away. You have to have a cash for next 2 months repayment. That goes away. If you're doing BC, you have FLDG. That goes away. Where form will you maintain 85% eligible asset? So the whole community went to the regulators and said that no, you have to reduce it. And they did a very good bonus for us. They reduced it to 75%. So everyone was excited that they've reduced it to 75%, But what they did was, previously it was of specified asset, and here they made it of the total asset. So effectively, from 85% it jumped up to 90%. So everyone was excited. I wrote to our federation that why are you excited? Now we got to give more, and which is much more impossible. Then ultimately they brought it down to 75%. So on practicality, what we practitioners know and do, it is not synced to that, and ultimately the problem is created. Take for example that they said 85% of amount will, 85% of your loans have to be eligible asset, which is unsecured lending. You will know that, what in risk, it is very clear that you should actually disperse your risk. Like you should not put all eggs in one basket. Now, if your whole of your unsecured, portfolio is unsecured lending, what happens if there is a black swan event? COVID was just that. And whole went into a toss. Now the regulator says, no, unsecured lending is bad. Unsecured lending is not good. So we should now bring down our unsecured lending. And the banks also, Reserve Bank or regulators have said that we should bring down. Banks have also stopped lending in the unsecured segment or restricted lending in the unsecured segment. Then what will the people who are supposed to keep that kind of asset do? So there are issues. There are issues in the regulations. Where their intention is good, but ultimately when the last mile is implementing it, there are so many gaps and issues. That needs to be sorted out. It needs to be more practical. Unfortunately, it is not. I belong to a group which has got operations in 13 different countries. They are very low. Bearish in India. They said, no. Your regulators are very stringent. Even when I go to international events where we talk to international lenders, they would lend in Africa rather than lend in India. Because they think that the regulations are too stiff. Where our maneuverability reduces. Thank you.
See, when we talk about regulatory practices, like how they are, so I think we have to appreciate RBI one part in that co-lending, they have not issued detailed master circular. Actually, this you should appreciate, because they are giving us some feel that we can actually, so you have never said no for something, so we'll assume that I can do that thing. So I think RBI always gives some opportunity also in that terms, because it's very easy to create a very exhaustive and cumbersome circular. But they also know that this is a new thing, and everybody knows that the moment some loopholes are there, so we all are like responsible bankers and NBFCs. Immediately we create a very good product that how to circumvent that particular guideline. So I think that credit comes to us also in that way. So because I was Chief Risk Officer for almost 9 years, so I know that how regulators see, how they talk to them. So in some cases, definitely if something is not going in favor of us, we feel that they are very stringent and all. But then sir, they have given a lot of opportunity also to play around, and we have actually utilized in a very proper fashion. Then after 4 years, 5 years, they say, no, that guideline is having something, so we have to plug it that. So I think co-lending is something what at least they have given some kind of structure, some kind of support to most of us. So I think we can definitely utilize that. And of late, I have seen that RBI is always asking input from entire, not only banks or NBFC, even to consulting firms, IT firms. And globally, they are taking views, and then they are actually trying to consolidate and coming with that. And somewhere they are regulator. So they are not the practitioner, or they are not supposed to be the practitioners. So I think somewhere we have to give some benefit of doubt to that, because nobody is there from RBI, so we can discuss in that front. So there is a point from my side.
I'm respecting your view. I agree with you. Regulations are good. In fact, RBI's regulations in the 2007 and later actually hedged us against all the risk that was happening in South Asia. There are certain good things. I definitely agree with you. Even if they are there, I will talk the same thing. So that is that. But I can also give you example. In one of the events, I was asking panelist who was a small finance bank, and in that particular year, we all were excited, sitting in the panel that small finance bank license has been given. But I asked him one simple question that there has been so many experiments, like the regional rural banks, other small banks, so many experiments. Most of the experiments have gone into a disaster. So of course we are excited getting small finance bank. What are the takeaways from those disasters that small finance bank would not land up into similar situation? So nobody had an answer at that particular point of time. And look what is happening to a small finance bank. Was small finance bank regulation wrong? No, it was good. Have we reached the sector that we needed to do it? Yes, we have reached the sector where we needed it. But somewhere something was amiss where certain small finance banks were facing real issues. So those are the gaps that needs to be addressed ASAP. So that needs to be actually done. I'll give you another example. Take the case of P2P lending. How many panel discussions did we have on P2P lending? We kept talking about P2P lending. So ultimately what happened? So what, the takeaway from this is, I'm not blaming the regulation. The takeaway from this is any regulations that comes in, we have to go by the spirit of the regulations. We have to responsibly actually bring out products or bring out our activities. Only then can the circular guidelines or a new innovative concept succeed. But unfortunately not. Even microfinance had issues because we have not abided by the spirit of the regulations. All my panel discussion, I used to say that we are not cross-selling, we are cross-dumping. And I used to also say that, it is not enough that you drive safe. Your neighboring driver also has to drive safe. Accidents can happen because of your neighboring driver too. So it's not that I'm blaming the regulations. I'm blaming the whole ecosystem. Everything comes, we get excited, and then some people join in. They try to make money out of it, and then ultimately the whole thing crashes. Thank you.
I'll probably add a few points here because it's from my personal experience. Because this co-lending, I think everybody discussed about it. So what is RBI asking? Frankly, it's my interpretation that they're saying, is your system is capable enough to handle the KYCs, even if it's a co-lending? Is your system is capable enough to handle the documents, all the documents that you're signing or the customer is providing? Is your system is capable enough to handle 80-20 and the 100%, all the repayment schedule that is possible in kind of permutation combinations? Is your system, are you managing the data of the entire customers or the credit decisioning that you spoke about the risk element? So how your system is automatically taking a decision, or let's say you are, let's say we are also working on an AI engine there. So how exactly you are going to maintain that the decision that is coming out of the system is also going to be totally unbiased? So these are the things. If it is in order, I feel this is something that can be done. And it's a good point that they are not telling that you have to do this business in this way. What they're saying that are you owning the customer? The first thing they ask that are you running your business in Excel sheet or it is in a system? That's the first thing they ask. If you say no, it's in system. If you're actually proving that the customer, let's say out of my 40 partners, every customer's data points, every customer's repayment schedule, every customer's collection records are there in the system. I don't think that co-lending should be looked into a different perspective. This is my personal view from a technology perspective I'm giving. The majority problem with the multiple players when we see that, they are struggling with the system. That's my personal, because what happens is, any point of time there's a regulation change that comes up, or let's say a new partner you're trying to onboard, and they ask any different thing. It could be a logic around some part payment, I do it in this way, or let's say some foreclosure, I do it in this way. How soon or how quickly you are trying to turn it around in a system, that's the key here. That's my perspective, and I feel this co-lending business, you cannot think without tech. If your tech, your backend is strong, I'm sure you should be able to sail through this. That's what I feel. Thanks.
Those were some interesting perspectives that came in terms of regulatory clarity, regulatory leeway, and openness to engage, and as well as the efficiency and resilience of your technology platform. So I think these are some great points that as a panel that actually came out, and I really thank each one of you for actually in terms of candidly sharing your perspectives, because it's the objective of any panel conversation is to ensure that people are able to candidly come across and put forward their view. So thank you so much for that. And more than that, it's been a great experience personally for me, because I got to learn so much. And very rarely does someone get an opportunity to actually just spend an hour and learn years of distilled, clear understanding and wisdom about an industry. So thank you so much for actually in terms of enabling me to be a part of it. And thank you so much, Anupam, for giving this opportunity. Thank you so much. And I think we are on time. Yeah, we are on time. Okay, that's great.
All right. Thank you so much, Vivek sir, for being so humble and bringing out the questions for all of us. And I think in the first panel, we could easily get it that co-lending is really important in our industry. And the first question arises is with whom you are collaborating, right? That's the first question. And of course, we got the answer that if the decision is taken wisely, the chaos won't happen. It will be a collaboration, of course. So as the experts said, co-lending is like a marriage. We all should learn from it. It's not a situationship, but it's a long relationship. So be careful with co-lending, be skeptical, take the risk, but first of all, do it in a right way. So it will be definitely a collaboration and not a chaos. Can we please give a huge round of applause for all of them? Now, I would like to request Vivek sir to please felicitate all our panelists one by one. So first, I would like to felicitate here and present a memento to Mr. Ashok Mittal, MD and CEO, Bilmart. Next, I would like to request to please come forward Mr. Alok Pathak, Director and CEO, Sharp Finance. Mr. Anjan Das Gupta, MD, ASA International India Microfinance Private Limited. Mr. Prasanjit Datta, CTO and CIO, Vivitri Capital. Mr. Pratik Garg, Chief Business Officer, Ambit Finvest. Mr. Manish Pandey, Zonal Head, Business and Collections, Muthoot Fincorp Limited. And last but not the least, in our panelist, Mr. Sushant Kumar, Head Collections and Resolutions, ICICI Home Finance Company Limited. I thank all the panelists to please, be here on the stage. I would like all of you to please take your seats and would like to call Mr. Abhinav Chaudhary to please felicitate Mr. Vivek Iyer. Our moderator for today, please put your hands together for him.